Good afternoon. Thank you very much indeed for coming, and thank you to iGaming NEXT for hosting us today. So first up the stage, we welcome Mattia Busuttil Murphy, co-founder of Brookfund, Fabianne Ruggier from RSM, Director of RSM, and finally Sadi, CEO of Livescore Group. Thank you very much. So the topic of conversation, navigating the short, mid and long term to ensure steady ROI across industry perspective. Hope over the next 20 minutes or so we can delve into the relationships and requirements that change over time with growth and scale phases through to larger scale international operations such as Sam is running. At the end we should have 5 or 10 minutes to questions. So by way of introduction, Richard Phillips from Brookfund, co-founder with Matthias on the right-hand side. Obviously, we've got a matching uniform today. We're a small private equity firm based in Malta. We invest predominantly in seed and startup companies up to Series A. Predominantly in property and energy tech, but Mattia, who I'll come on to shortly, is an iGaming expert as well. My background is a founder of generally facilities management businesses in the UK. So I don't come from an iGaming background necessarily, but hopefully we can delve into the iGaming side of things today as well. So Mattia is a highly commercial operator from the iGaming world in Malta as well. He's worked for Betson and Press Enter and now supports our company on all things commercial and operational execution. We hunt out companies, small and medium, and help them raise capital. On the panel, I'm also excited to introduce Sadi, CEO of Livescore Group. Huge experience and expertise in the sports and gaming fields, and we'll be able to share some of his information and wisdom on running these operations as well. I believe you just raised £50 million last year as well, in terms of, so he's got an up-to-date experience on what investors are looking for as well. So conscious of time, let's dive straight in. Fabianne, Director of RSM in Malta, global audit and tax consultancy firm, but you've got a particular interest in helping and nurturing startup companies and the local ecosystem. Can you tell us a little bit about the ingredients needed between founder and investor, and what RSM does to help them?
Sure. First of all, thank you, Richard, for inviting me over to sit on this panel. Thank you, everyone, for being here. So I'm Fabianne. I'm a director in a consultancy firm. We also do tax, accounting, and audit. I lead the team together with other business partners, and our focus is supporting startups as they go through the journey of starting and scaling. We have discussions with them from various angles, whether it is understanding how the business model might evolve, how they are recruiting and retaining the talent, how they are scaling their finances. And anyway, we sit with them as business advisors. So what I thought I could share with you today is some insights as to what we've observed, what works, what doesn't work, and maybe you can find these insights useful in your own journeys. So first of all, I think when it comes to chemistry between founder and investor, first things first is being very honest and brutally honest with yourself as to what you want out of this relationship. So what am I seeking out of this relationship? Do I want a strategic investor, or am I simply interested in the financing? Because that sets clear expectations around the type of profile that we would help the startup identify in terms of investor. It also sets the tone as to how the communication flows, how the decision-making flows, and of course, trust. So is there openness to building trust with each other? Can we set a governance framework from the very start as to how decision-making will flow and how decision-making will work? When we work with the startups as well, what we coach them on is to, first of all, be extremely clear on the vision and the personal story. So what are we trying to sell here? It's not only the product, the solution, and the possibility, but it is also the personal story of the founders. Why are we here today? How did we manage to come here today? And what is our vision for the next years? Once that is very clear, obviously, next is the numbers, the financials. They need to tell also a very clear story of what have been the successes so far, but also how do we envisage that the business model will continue evolving, and what could be the roadmap of that business model evolving. Something else that I wanted to mention as well is ensuring that if, of course, the founding team is not only made of one person, that there is a common understanding, because pressures between the founders sometimes and misalignment between the founders sometimes might even complicate further the journey and the conversations with the investors. So it might sound very simplistic, but human relations and communication tend to be crucial in such journeys. I'll stop here for now.
Thank you. Just out of interest then, from RSM's perspective, have you noticed any difference or change with the macroeconomic climate in terms of numbers of startups coming into Malta, or what have you noticed from a sort of local perspective on that?
Yes, definitely. From a macroeconomic perspective, we work very closely with public entities that are designing schemes to attract startups, foreign startups, onto the island. So the government is being extremely ambitious to compete with other jurisdictions and simplify the process of coming to Malta, setting up your startup from Malta, or opening an EU base from Malta.
And there's schemes such as the Malta Enterprise?
The Malta Enterprise type of funding, yes. At the moment, they are running 2 or 3 schemes that one can maximize, and we've seen tickets of €1 million being given to high potential startups. So that means that they get the necessary initial injection to be able to set up a base, incorporate, bring in the fresh immediate talent, or relocate their key people from abroad and have a base in Malta, so actually have a physical base in Malta. So that has made a huge impact. Secondly, what also government has done is that it has signed up collaboration agreement with accelerators. So there are 2 prominent accelerators at the moment. One is from the US, Plug and Play, and one has operations in London and in Singapore and now in Malta, Supercharger Ventures. We are the local stakeholder that is supporting these accelerators, and therefore these accelerators have already run their first cohorts in Malta. So we've seen a very interesting relocation recently over the past year of some interesting startups in the digital sphere, particularly, whether it's education, whether it's ESG, whether it's health. So quite a very important ingredient to the local startup ecosystem.
And my understanding is that iGaming isn't actually allowed through some of those systems. So
you're correct.
Yeah, okay.
You're correct. Digital game, so gambling not, digital games, yes.
Yeah, sure, thank you. Yes, we've obviously invested in a few companies recently over the last few months, ranging from architectural cabins and all sorts, heating units and things to help out with people's water supplies and all sorts of things. But as a business, for companies trying to raise capital from a purely sort of commercial angle, what are founders looking at, and what do they need to be presenting to the likes of whether they're going out for seed capital, Series A, and so on? Also, from a sort of short, medium, and long-term perspective, if that's okay.
I would probably say that the first thing is having a very clear strategy. So, as you know, sorry about that. As you know, strategy is essentially a plan, but then it's also about execution. So, depending on the sector you work on, it's all about sort of creating a vision that excites investors to bring in sort of that funding that's required. But ultimately, it's about not shooting yourself in the foot. I mean, everybody today, we've seen the rise and fall of very unrealistic valuations in the fintech space, especially. So it's crucial as a founder when you are trying to raise capital is making sure that your vision is deliverable. And that's understanding there's a clear sort of a clear way to ROI. When you start to look at short, mid, and long term, that can look very different from many different perspectives. Whether it's from the direct investor side, whether it's from your actual delivering on ROI. So if you take sort of short-term goals, it's about really building a foundation for a business to be able to scale, recruiting the right team, and making sure you, as Fabianne said as well, ensuring when you are raising capital, finding the right investor. Are you looking for a strategic investor? Are you looking maybe for somebody just to come and give you a lump sum of cash and you can just get on with it? So setting up your base is very, very important, because that will essentially allow you to sort of navigate and kind of sort of identify that clear path to ROI. The midterm is obviously very much about actually delivering on that growth. So someone's giving you money, you need to take that money, you need to execute your plan, you need to start seeing traction. And generally in the midterm, it's all about traction. You know that when you start looking at numbers from month 1 to month 3, you can get a 500% growth, but you're never going to do 500% growth in year 5. If you do, that would be phenomenal. Congrats to you. But it's all about sort of layering and kind of creating those stepping stones to get you to the level where you need to be. And then obviously when we start to look at the long term, it's very much about starting to return that investment. On top of that, it's being in a position to scale. So as we know, like historically, you say you spend money in the beginning, you start to optimize cost at the end, and then you sort of kind of complement each other towards year 3, year 4, year 5, depending on the sector you're in. So those are really like the main foundations of identifying a short, mid, and long-term strategy. If we take iGaming as an example, it can be very tricky, especially if you are trying to build brands which are going to be here in 3, 4, 5 years. As we know today with the likes of, from a regulatory perspective, there are more lucrative licensing jurisdictions that allow you to benefit from very, very low taxes and sort of quicker revenue generation. Where in the previous panel they mentioned the talks of dark grey revenues as well as whiter than white revenues. So it's very important about that strategy. But ultimately, it's about being able to sort of manage all those levels at the same time. So if we take marketing as an example, affiliation is obviously going to be your quickest way to generate traffic. You're going to get that quick acquisition, you can monitor the traffic, it's highly measurable. If it doesn't work, you can kill it very quick. So it's the perfect performance-based sort of acquisition channel you'd like to use, but it's extremely expensive. So ultimately, you need to start blending your revenues and your marketing budgets in a way that allows you to sort of start reducing the dependency on affiliation. So today, if you want to go and grow a casino business with 5, 6 top affiliates and generate €1 million in revenue, it's not as hard as you think, but you have an extreme high dependency on maybe 5, 6, 7 partners. Today, as you know, PPC tends to be black hat, that's the quick revenue. They can get cut off tomorrow, lose their accounts, and next thing you know, your traffic is dropped by 50%. So that is a very short-term strategy. It's not sustainable, and it's very costly. So identifying that blend of investing into SEO, which a lot of people tend to say, we need the quick revenue now, so let's invest into PPC, and then let's start investing into SEO maybe 6, 10 months down the line. But the reality is, if you invest from day one, when you come to the point that you want to diversify from affiliation, your SEO starts to kick in. So it's balancing short-term, mid-term, long-term sort of strategies, diversification from your traffic. And that's one of the biggest challenges that people tend to sort of confine within the iGaming space.
So just from an iGaming sort of perspective as a whole, do you think the industry is developing quickly enough to attract investment who might be more agnostic towards the type of industry? So how can iGaming as a whole attract more investment, do you think? Are we keeping up with the likes of AI, and what are the trends in the market, do you think?
It's a bit of a hard one. Ultimately today, if you're not using AI in some sort of capacity, you are going to fall behind. So whether you're using ChatGPT to save money on content or whatever it may be, a form of AI is the right way to go. But ultimately, gaming is specifically, it's entertainment. So people are going there to, whether they want to hide away or they want to play or they want to just kind of enjoy it with friends, you are selling entertainment. So if it ain't broke, don't fix it. So it's a bit of a tough challenge over there of sort of how companies can innovate, but at the same time still sort of not ruin the essence of casino entertainment.
I noticed that ESG was on the agenda for later on when we came in. So I'll be interested to hear a little bit about how they're going to tackle that one within the the gaming space. Sam, your growth is absolutely staggering. I'm sure everyone would love to hear a little bit about that and how you've achieved it. What's your take on the investment industry as a whole coming into iGaming over the last sort of 3 years, and how have you seen any shifts happen within the industry?
Sure. I'll pick up the last part of your question first. Obviously, the investment climate towards our industry has been really dictated by the US, as most of the capital allocation since the repeal of PASPA has been coming through US capital allocators. And what's really interesting to me is, a lot of this investment is being led by analysts who are new to our industry and, who've made insane predictions throughout the last 3 years and have still kept their jobs. And what's even more interesting is a lot of the narrative that these analysts have built have guided the strategy of, some of the biggest operators in the market, monitoring GGR-based market share. Then somebody started saying, you need to own your entire tech stack, and you've seen everybody trying to buy sportsbook engines and free-to-play game engines, and now it's the path to profitability. You need to be profitable to be investable. And really, having gone to market to raise money in the last 3 years, you really need to break that narrative and as you've alluded to, say, I have a strategic edge. Look at my team, look at my strategy, look at my metrics. We're winning. Forget these preconceived notions that you have about what is investable. No, you don't need to own your entire tech stack. We've proven that in the last 20 years in Europe. Where did you come up with that? All innovation doesn't need to happen in-house. So it really comes down to being able to present a strong, confident investment case and trying to, get over those, prejudices that have been built in the US in the last 3 years. And, to also refer to what Fabianne was saying, also flip the narrative and say, what do you have that you're bringing to us in addition to the financial investment? And this is, what we achieved in the last round. We went out to market to raise 50 million of growth capital. We set our own valuation where we felt it was right based on our growth and our revenues. And we looked for a strategic partner who could open up new opportunities for us. And we, concluded the deal with Ruggier Sports Media, who's a large Switzerland-based media conglomerate, who have sports properties in Eastern Europe and the Baltics. So it opens up new markets for us in addition to the growth capital that we're receiving. And the strategy and the edge, I think when you said we need to look at strategy, you're actually looking for an edge. What does this company have that's different? And what we've done is we've gone to very saturated, very competitive markets like UK, like Ireland, like Netherlands and Nigeria, and we've implemented a convergence ecosystem where we combine the strength of the media audience that we have with Livescore, with over 50 million users globally, and we've created an ecosystem as a product that integrates media and betting. So that obviously allows us to get CPAs that are unachievable by any other operator. It gets us retention rates that are much higher, gets us reactivation rates that are much higher, it gets us output that is much higher. So to an educated investor, when you present those and then you show the technology and the strength of the team, if they don't get that, you have to walk out of that meeting anyway, because it's a waste of time. If they start coming to you and say, well, you're not profitable. Well, I'm 3 years old as a company, and we've invested over 250 million so far. I'm not profitable next year, but I'm growing at 50% rate in a market like UK. Who else is next? Plus 5% growth, the next biggest, fastest growing. So yeah, it's a difficult environment steered by, let's say, less than knowledgeable or experienced analysts right now in the US. It will end. It's starting to become more rational now, but it has been spectacular to monitor this environment and how misled it's been for the last 3 years.
So, as a media company coming in to buy up a stake in you guys, what's their sort of long-term growth plans, and how do you sort of speak to your investors on a month-to-month on the long-term strategy? And presumably, there's some sort of longer-term exit plan, or what is the long-term goal?
That's a great question, and it comes up in board meetings, investor meetings, and I'd like to avoid it by saying we're not building a company for an exit. We keep saying, we have a long-term purpose, and that's to deliver every sports to every fan around the world. That could be achieved in 20 years, maybe 50 years, maybe never, but that's what we're pursuing. And to be able to deliver every type of sports content to every fan in the world, you need to have a business model that works better than the existing business models out there. And we've proven that we can achieve that in the countries that we operate in. We're 10 to 15 times higher in terms of the revenues we generate per user as a media company. So you take that competitive edge, and what you want to do is show that you can scale that. And the multiple ways we can scale our business is, geographically, we can expand this ecosystem into territories where we already have media users. We can expand by investing into more content, and we can also, scale by traditional means, user acquisition through marketing investment. But even that, we can invest to Livescore Media, to the top of the funnel. We can invest into Livescore Bet directly, because every user that comes into our ecosystem is more profitable than any user in, let's say, Entain's product suite, even though now they're going into Livescores themselves and trying to build this kind of ecosystem. So when I speak to investors, it's all about picking which area of our business to invest, where to allocate capital, and where do we get the best returns, but all without losing track of our long-term vision, which is just to add more and more value to our ecosystem in forms of content, features, and also obviously delivering a world-class sportsbook that's integrated.
And are you able to share which new markets you're going to be entering into over the coming years?
Yes, of course. And like I said, Ruggier has some of the top sports properties in Eastern Europe and the Baltics. And our next market that we will go into will be Bulgaria at the start of next year. Then we have plans to expand more into other territories where they're strong, Serbia, and then also, based on our users, we'll look into South Africa and maybe a few other African territories.
Okay. Mattia, what are your thoughts on the approach of sort of institutional investment, the shift between going from B2C products to a more sort of B2B services?
I'd probably say in the gaming space, and in other sectors, moving B2B has clearly been the sort of way to really drive valuations. You could see that in the last probably 3-4 years, you've probably never seen the same amount of growth to the amount of SaaS models out there. Everybody moving to transaction-based sort of costings. So there clearly is a lot of growth in that area. I think when it comes to B2C, depending on the sector, if we take iGaming, it's very much operator-led. So we have probably seen a very few operators over the years who've really come to market and sort of revolutionized sort of gameplay and the user experience. One of my personal favorites is Wilds. I think what they've done over the years is just really created a really nice experience, the way they engage with the brand and sort of users. As well as that, now you start to see more and more brands come out there and reinvent themselves. So I would probably say from an institutional perspective, you can understand why they move towards B2B. I think there is a higher possibility of valuations, growth, and obviously for the ability to scale through their personal networks. So that would be my take.
Fabianne, from the outset, are you seeing more private individuals, family offices, VCs, private equity? How are you seeing the trends in the market?
From an investor perspective, what's interesting, I'll speak about Malta, right? What's interesting that we are observing at the moment is that there are, so first of all, the Maltese economy is mainly made up of family businesses. strong household names that have built their legacy from traditional economic sectors. But there is now a new generation which is taking over these family businesses. And this new generation, 40-year-olds, new leaders that are very open to diversifying the investment. So experimenting into new areas, complementary or totally different from the legacy business. And these individuals are sitting with us and having conversations, and we're getting calls for these individuals to understand how to approach the digitally intensive possible startups. So that is a very interesting development locally, because, I mean, they're not family business offices. They are not super structured in that manner, but since there is appetite and there is interest, we do expect that we see a couple of them, particularly those that sit on cash-rich family businesses, to continue evolving their investment appetite and structures into something which is more formalized. From a business angel investment perspective, yes, as well, there have been some movements. However, in terms of VCs and mature and sophisticated VC firms, unfortunately, Malta is not yet at that level. So I think what government is doing is good in terms of raising the profile, raising awareness. For example, next year they have managed to attract the EU Startup Summit, also to the islands. So the idea of outreach and promotion to at least position Malta as a possible jurisdiction that could be a nice, a nice location, is slowly but surely having some ripple effects.
Yeah. The screen's turned red, so we'll move to some questions just shortly. But
Rich, just to add on that, I think something what's interesting as well, is specifically to Livescore, is when you look at the level of institutional investment that has come in at a 50 million raise, specifically into a product which is very much B2C, but what's probably driven the valuation is the B2B by selling affiliation and other parts of your business.
Certainly part of it. I'd say about 25% of our revenues are direct sales to bookmakers. We don't do much as a traditional affiliate. We've been lucky that our inventory is always multiple times sold out, so we get to dictate most of the time our terms. But yeah, it is a fast-growing area, as is as an independent media business that isn't B2C in the sports betting vertical. We're only live in 4 countries with our B2C sports books, and the rest of the world contributes around 30 million a year to our 130 of annual revenues. So it is quite significant, and it's much higher margin than obviously. It's not as heavily regulated so far. Yeah.
Going back to Malta a sec, so some news hit the headlines around the MGA earlier this week, protecting operators. To what degree do you think that will pull money back into Malta and back into the Maltese economy? Open question.
Yeah, I think it definitely will sort of make the MGA more attractive. It is questionable on an EU sort of regulatory level if they can actually really enforce and hold that, but the law is there. So I think it would I think for operators now considering more lucrative jurisdictions such as Curacao, Costa Rica, Isle of Man, etc., I think that might actually sort of help them. But it also depends on where their revenues are coming from. I think that the bill that's passed through has been very specific to Austria, where they were able to enforce court action in Malta, which has created precedent. And then from there, it's allowed, obviously, a number of legal firms around Austria going on a marketing spree to try and help every person that's played on an MGA brand to try and claim back their winnings, which has obviously put a lot of pressure on operators. I've heard from personal friends who are operators having 300, 400, 500 of these cases coming in at a time, which is extremely costly in terms of having to hire lawyers and sort of go through all these proceedings. At times also refunding significant amounts of money, which can impact a business from a cash flow perspective. So I think it is good for some operators, but whether it would stand and for how long it would stand will be yet to be found out.
So open the floor to any questions for the panel, please. No? Scared? Not a problem. Look, so Brookfund, we're hosting a drinks event later this evening at the rooftop bar at Overgrain at the Roselli Hotel, just down the road. 8 o'clock. If anyone wants to or wishes to join, please catch Mattia or myself after this, and I'm sure we'll see if we can get you on the list. Thank you very much to the panel. Thank you all very much for coming and joining the debate, and that's it from us. Thank you.